Is real estate still the superior investment vehicle? Let's see. Let's compare it to everything else. We'll look at 8 asset classes and compare them all. A new poll shows that Americans feel that they are worse off financially right now than at any time since 2009. And also, do you know how bad taxes are on your gambling winnings? I'll get into that. And finally, I'll tell you where I think mortgage rates are headed next. So settle in and stick around for all of this. Hi, I'm Keith Weinhold. This is GRE. So I confidently strode to the counter at the small running shoe store, eager to purchase a nice pair of Salomons for $140. As this sales guy was about to ring me up, I just kind of half-jokingly asked him, "Hey, do you accept Bitcoin?" He smiled and said, "No, we don't." And then he asked me with a sparkle of fascination in his eye, "Do you have any Bitcoin?" And I said, "Yeah, I have just a little." And he was like, "Oh, wow." And he looked at me with near reverence. Well, that transaction, that occurred last April after Bitcoin prices soared and crested. And since then, Bitcoin would go on to fall more than 75% from its all-time high. Yeah, I don't think that the shoe guy would react in that same way today. Might he even wonder how a Bitcoin holder could even afford a pair of shoes? Well, when the Fed began jacking up interest rates last year and the easy money stopped flowing and it dried up, well, a lot of asset class hot air balloons, let's call them bubbles, they deflated. All right, that easy money hot air was no longer being pumped into the bubble. So this will be fun. Let's compare how in this economic deleveraging cycle, how 8 popular asset classes have performed, and we will peer at these through a pair of GRE financially free binoculars. First is stocks. I have yet to see one real-life example where retail stock and mutual fund investing has propelled one from poor or middle class into wealth. That is why it's a real mystery that the masses act obsequious toward them. The S&P 500 was down 18% last year. That was its worst year since 2008. So that's not representative of it long term, and it has recovered a little early this year. An IPO, that is a new stock offering. It stands for initial public offering, and last year IPOs hit their lowest level since 2016 in a stagnant stock market. Where's the cash flow in stocks? I'm going to look at the cash flow for each one of these asset classes. Well, the S&P 500's dividend yield is under 2%. All right, well, what about that Bitcoin? It might symbolize the asset bubble popping better than anything else. Now, I actually like Bitcoin's decentralization and its fixed supply. There will never be more than 21 million Bitcoin issued. But that doesn't mean that it's the currency of the future either. It takes more than just scarcity in order to drive value. And my shoe salesman shifted his sentiment because Bitcoin cratered 65% last year alone, but this year it's up 30% plus. And during this year's Super Bowl, crypto ads, which were rampant in the past years, those ads were out, if that tells you anything societally. Where's the cash flow? It's basically zero with Bitcoin. And Bitcoin holders that try to get yield on these imploded exchanges like FTX and Celsius, they basically had their crypto confiscated from them. All right, what about gold? All right, gold, that is a poor place for you to build your wealth because over time, it just kind of roughly tracks inflation. But though it's a poor wealth builder, owning physical bullion can be a good place for you to store your wealth if you do have a big amount of wealth. It's relatively safe there because gold is one of the few assets that's had value for millennia. You can't say that about very many things. Well, the classic hedge, gold, was down 2% last year, and the shiny metal ticked up to 2% this year so far. So gold has lagged inflation here lately. And well, where's the cash flow in gold? Well, although there are some creative ways to generate yield from almost any asset, it is basically zero. Before I talk about how bad savings accounts are and have been for your wealth, for later, save this video if you're interested, where I break down the difference between the dollar gold, and Bitcoin. There's really some great learning there, all in that one video. All right, well, how about savings accounts? How are they doing? Well, high inflation, that just keeps super savers toward absolute poverty. They keep trending that way. Today's best high yield savings accounts, they still generate returns lower than inflation. The latest inflation reading came in at 6.4%. Your prosperity is being eaten alive every single day in savings accounts. All right, so depending on what you believe the true rate of inflation to be, your $100,000 annually in savings is debased down to between $82,000 and $94,000. That's all you got. You keep trending toward poverty. Where is the cash flow in savings accounts? Well, in real terms, it is less than zero. How about bonds? All right, well, how about bonds? Bonds are basically these IOUs that you hold on to when you've lent your money to a government or to someone else. I mean, from the 1 month all the way to 30-year government treasuries, yields are less than inflation. And where's the cash flow in bonds? Well, in real terms, it's less than zero. So I'm comparing the returns in asset classes over the last year plus. I'll discuss real estate last. And even if you're watching this, say, 5 years from now, you are getting some lessons. All right, now how about gambling? All right, well, though it's not really an asset class at all, it's a more nascent way to speculate and game your way to financial gain, and that's due to a lot of states' recent legalization. So the proliferation of mobile gambling apps, including sports apps like DraftKings and FanDuel, they are especially dangerous because now it's like the casino is right in the palm of your hand, and exceedingly few people realize that federal gambling winnings tax must be paid on your substantial gains in casinos and sports books and lotteries and raffles, the horse track, and even bingo. Yeah, you can be dinged 24% for federal taxes. And did you know that casinos even report winnings to the IRS if you've got a big winning? And then on top of this federal gambling winnings tax, you got to check to see what your state has for any gambling wins tax as well. And yeah, I said bingo there earlier. What if the IRS rated a retirement home over bingo winnings? That just sounds incredibly cruel. Well, where's the cash flow in gambling? I mean, that's just not even applicable here. Hey, go ahead and put a YouTube like on the video here if you like how I'm breaking it down. I really appreciate the like. All right, what about oil? Oil is the most traded commodity in the entire world. It was up 2% last year, and it's about even early this year. Oil prices are famously volatile, bouncing all over the place. And I think everyone still has 2020's jaw-dropping price dip to negative $38 per barrel. That's still seared in their mind, the memory of that. And prices at the gas pump, they've really been like this inflation billboard. At this year's State of the Union address, President Biden said, "We are going to need oil for at least another decade." Yeah, he's got that right. And where's the cash flow? Well, some oil stocks pay 4% plus dividends. All right, what about real estate? That's what I favor. That's what we do here. Now, I guess that there are a few ways to beat real estate. Maybe if, say, you're an angel investor or you're a venture capitalist that picks the right startup company that ends up going to the moon, for example. All right, but for that one moonshot pick, how many of those picks go to zero? So carefully bought real estate, being stable, high return, and low risk, real estate nationally was up 10.2% last year. But this year, some geographic markets are up and others are down. So the places that are down, there were markets that got overheated in the health crisis, like coastal California, and really a lot of places that tend to be in the western half of the United States. The eastern U.S. has fared better, and I don't expect much price movement in our core Midwest and South real estate markets, those stable markets that we invest in here, although a lot of those areas keep seeing this actually a slow appreciation here lately, not just flat, but appreciating oftentimes in the Midwest and South. And where's the cash flow? Well, rents are catching up to rising prices. Cash flow can be as high as 10% in places like Memphis, but it's usually less than that. And in fact, by historic measures, it's really not that high for real estate, but it's probably just better than anywhere else. Even DraftKings? Yes, even better than using the DraftKings app for building your wealth. Half of Americans say they are now worse off than they were a year ago at this time. That's according to a Gallup poll that was released last week. Well, that is the highest proportion of people since the year 2009. And that makes sense because most people are impoverished by inflation, their wages don't keep up, and many of them have investments in stocks and mutual funds, which lose ground to inflation, rather than real estate, which wins really big with inflation. You know, good investments, they should be like painfully obvious to you. Otherwise, they're probably not worth making. So for example, like here's how you would explain to a friend what you do in 15 seconds. Small down payment, bank buys you the property, tenants pay down the loan, property manager handles everything, you collect cash every month, and inflation builds you massive wealth. And inflation builds you massive wealth in three ways. Since your asset value rises with inflation, your debt is debased by inflation, and then your rent increases outpace inflation. And that's because your loan cost is fixed. And I won't get all into that. If you don't understand all of that, known as winning the inflation triple crown with real estate, I'll put that educational video series right up here for you. And when you list out the benefits of real estate investing compared to the downturn in other investments, some of which have been imploding bubbles, it begins to become painfully obvious. As the longtime king of all wealth builders, we know that real estate pays 5 ways. Without inordinate risk, total ROIs of 30% plus are still common when you add up all 5 profit centers. Yes, even in this deleveraging cycle that has made some asset bubbles deflate. And that's because on top of any appreciation in cash flow, those 2 ways you're paid this next year, both of which I expect to be historically low, you could add on another 3 to 5% annual ROI for the 3rd way you're paid due to tenant principal paydown, 20% plus for leveraged inflation profiting, and then really an embarrassment of tax benefits, which have actually never embarrassed me one time. There is some bad news though when I look ahead with real estate. I do expect some near-term upward pressure on mortgage rates. Now, I'm not going to predict right where they're going to go because that is really hard to predict, mortgage rates. But I'll tell you that I do see a 70% chance that mortgage rates rise substantially from here over the next few months. And why is this? That is due to hot jobs and hot inflation and hot GDP reports. And that means that the Fed is going to raise rates more, which have a loose correlation, not a direct correlation, with mortgage rates. Hey, we'll leave a comment here about asset classes or anything else that I've brought to you today. I'd love to hear your thoughts with a comment. I'm Keith Weinhold. I'll see you next time.